Globally, stocks look weak, but look closer. US stocks are weak as well. Just 4 stocks have made up nearly all of the gains in 2018. It's completely ridiculous in a historical sense. How long will investors and financial analysts fool themselves and others? You came here for the truth, so let me unveil that for you. Today we're going to look at the US markets. I'm going to show you what's going on in China with their market doing very bad at this time. I will show you global assets. So much to cover here today. There's really too much, but that's generally what I do. Now you can see what's going on today as I record. The Dow Jones here is down just a little bit. Perhaps the plunge protection team will come in towards the end of the day, and we can look at where this stock market has gone. So late January, we see that the stock market had peaked, and then today we see it is down, and it has been trading within this range now for several months. So we are now in July. We are basically 6 months away from that peak, and yet the market is still not recovering. What's going on? What's really underlying all of this? Because I hear nothing but positivity when I look at CNBC and Bloomberg and so on. I'm constantly being offered different stocks to be purchasing today, which are going to be the best picks for the week and so on. What's happening here? Why aren't we realizing that there is continued weakness? Where is this weakness coming from? Which stocks is it? Well, allow me to show you something quite interesting. 10 stocks have contributed more than 100% of the S&P 500's year-to-date return. This is just as of a couple days ago. You will see right here, the top 4 stocks account for 84% of this stock market's rise. 84% in just 4 stocks, the entire market, S&P 500's market. That is absurd. Historically, this is a very, very big problem. Then you look at adding in Facebook and Google, you'll see that that would add another 15% on that. This is ridiculous to see how just a few companies could make up so much of the S&P 500's gain. That's not normal. And you look at this all coming at a time when we've seen the market truly looking weak. Where has this market gone? During this period of time, we have seen the market being quite stagnant, going sideways. But in reality, if we extract these few from the equation, the market would actually be heading down. Since January, the market has been heading down. But you add in just a couple stocks, and suddenly the market is flat. So they just pump up these few stocks, and there we have it. A market which we can promote is doing fine. There's no recession. Everything is doing great. All you need to do is control a handful of stocks, and hopefully that will push up the rest of the market. But that hasn't been the case. Globally right now, we see weakness in the stock market throughout 2018, triggered by the VIX, which I think is silly out of all things to be triggering. What we can tell from that incident with the VIX is that all of these different derivatives and the gambling that they've created will in fact become a problem at some point in the future, whether it's going to come from the VIX again or some sort of other derivatives or anything else. It's going to be a trigger event that takes place that nobody would have thought. In fact, look at the VIX index. I was covering it all throughout, but nobody thought that it would just go in complete haywire, chaos, and panic mode in an instant. That wasn't really suggested or thought about, but it happened. And so ever since that point, the market has come down. We saw 13 months in a row of continuous increases in the market, and suddenly one event changed that. But hey, you don't need to worry so much if you're invested in these FANG Plus stocks. It seems like everything is just going to be okay, right? You tell me. All right, moving on. Looking at the Chinese currency versus the US currency, and you could see that we are moving towards the 6.7 mark, which they say supposedly this is a very significant number. I don't know, but all I know is that this currency has been devalued here, whether we could say it's intentional or whether it's some sort of other game. I don't really know exactly what's going on behind the scenes, but I'm sure this is all part of the currency wars that have taken place. Every country does it. There's no real denying that. Looking at it on a 1-year chart, you can see where we've come from until today. I thought that would be useful for you to see. And you can tell specifically that this has been very, very recent where they've been ramping this up with all the whole tariffs and everything that's been happening just recently. There's been this devaluation. I found it interesting to look at this in the mentality that if they are going to experience tariffs on US products, if they devalue their currency, perhaps this will even the playing field. I don't know if that's the case. However, interesting to note. Moving on, looking at the Shanghai Composite. Well, I brought it to you when it was 21% down and now 22% down from the peak experienced at the end of January up until today. That is, ladies and gentlemen, a bear market. That's okay that it's a bear market. Nobody has to be sad about it. Nobody has to be worried and suggest that this is nothing but, if we just take out one letter here and put this one on top of it, fear. It's okay. That's what happens in markets. Sometimes they go up, sometimes they go down. All we need to do is prepare accordingly. If you were buying stocks up in this region here, you probably feel a little bit silly right now. But what they're suggesting is that the market will return. I don't know if that's going to happen. They're going to require massive intervention in order for it to get to that territory. 22% is no laughing matter. It will take some time. It will take a lot of money printing. We'll see how the Chinese central bank really goes about this. Now, I'm going to show you a series of charts right here to cover what the assets have done this quarter, and I've continuously shown you this over these past several months to kind of give you an idea of where assets are as time goes on. That's basically what we're doing here at this channel, is documenting the reality of the situation, looking at all the things that you're not going to see generally on CNBC and Bloomberg. If you want all the happy, positive news, you want to know which stocks are the best to buy for this week, this is not the channel for you. There's a lot of other individuals out there who will do that, who will tell you that this is a corrupt system, this central banks rule the world, and yet you should buy this Walmart stock. It's a good buy. I don't do that here. That's not what I do. Look at this. Total return, by the way, it's going to show you in local currency, and then I'll flip and I'll show you in USD. But essentially, I'm just going to go through it really quick. Total return performance of major global financial assets. You can see this on the left-hand side. Crude oil significantly higher. Brent, of course, as well. Going through all of these, Spanish bonds being in the positive territory. Flipping all the way over to the other side, we are looking at the Chinese stock markets and so on, emerging markets, and we have a lot of negativity there in their local currency, and you'll see that generally about the same thing happening here in USD. Total return performance of major global financial assets, second quarter of 2018. There we go. Now that's showing us more realistic. Just in the second quarter here, we can see that Brent and WTI have moved up dramatically, and then so on. I won't bore you with all this, but let's move on here to show you this in the USD as well. Interesting that Brent has actually appreciated more because the currency has done better in this last little while. Total return performance here year to date, very clearly that oil, that these, I wouldn't say all commodities, but oil definitely has been gaining quite a bit. Wheat as well, it's showing us. Looking at this, nobody really suspected it to be increasing, at least at at the rate that it did, and I find it to be one of these constant issues that we see in markets. Nobody expected it to happen. I hear that all the time. Every time there's a crash, every time there's a recession, or every time there's a dip in the market somewhere. Oh, we never expected this to happen. How could it's like they were blindsided every single time. That's the way it is. Abnormal conditions are the norm. And here we go in USD as well, okay? Looking at this, with all the tariffs going on, we need to address what's going to happen for the individual investor, all right? According to the European Union, they're considering these tariffs to be a tax on the American people if they start to put tariffs on European car makers. They are ready to put a $300 billion worth of these countermeasures on the US. That's big. That's very big. $300 billion here, going back and forth. You know, when I look at this, I don't really understand this going back and forth business with tariffs, whether it's EU, whether it's China as well. Number one, it would make a lot of sense to say, look, guys, we are just getting crazy here. We'll set up a summit. We're going to go sit down, all of us at a table, and we're going to figure it out. We will get out of certain deals, if that's what it is, or we're going to sign certain deals that are just two countries. That would be the ultimate. But of course, with the whole EU, that becomes a big problem. But anyway, what I would like to see is two countries negotiating on their own terms, deciding how it should be. Okay, we're good with that deal. Okay, you win some, you lose some. Okay, next country, let's do a deal. And they work out their business like that. And number two, all of these are controlled by the same multinational corporations. You look into the EU, you look into the US, Australia, all of these places. The same multinational mega corporations control all of these countries, all of the products that are being sold, all of the services, all the insurance and everything else that's underlying all of these systems are completely controlled in just a few hands. Pfizer has raised the prices of 100 products just recently here. And we are talking about the fact that, you know, this was supposedly going to be going down in price. Do you really think that these type of companies are ever going to bring the prices down? Why? Why would they? Corporate profits right now are very, very important, more so than they have ever been, and they will increase the prices constantly. Maybe there will be periods of time where they do come down just slightly, but we know the trajectory. Corporate profit is number one. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel. So I do appreciate that. And if you want the financial education you were not taught in schools intentionally, these two books have it all. I took all of my knowledge from all the reading, all the seminars, everything, brought it all together into these two books. Very, very simple to understand, whether you've never been into finance at all or whether you are in the industry currently. These two books are very detailed, but very, very simple to read. If you want to flip through them, you can do so at Amazon. Links are in the description. If you're more interested in the audiobook version, you can get that at themoneygps.com.